It seems that the crypto markets have been stalling in terms of price growth over the last few weeks to months. What is going on right now? We'll be examining this and taking a deep dive into the different ways you can earn money with cryptocurrencies with a very special guest, Shane Molidor. He is the global head of business development at AscendEX. Shane, it's your first time on Kitco. I'm very excited to be speaking with you today. Welcome to the show.
Thanks so much for having me, David.
We're going to be talking about AscendEX. And yeah, you're welcome. We're going to be talking about AscendEX and the advantages of centralized exchanges like yourself. But first, I want to give an overview to the audience of the crypto space right now. I've been hearing this term a lot, Shane. Crypto winter, is it coming? Is it here? Are we going to experience 2018 to 2019 again? What do you think is happening right now with prices?
Yeah, absolutely. I think it's a very valid concern. Crypto winter referencing a very dramatic retracement and subsequent capitulation for pricing of assets like Bitcoin and Ether. My perspective is that what we've seen year to date, 2021, is more of a healthy retracement. Obviously, the year started out very hot, very exciting. I think that we saw a lot of enthusiasm, which then translated to irrational exuberance. A lot of buying, which of course drove the price higher and higher up into the 60,000 range. And I think what we saw was a lot of that buying being conducted on leverage. When the market moved against these buyers that purchased on leverage, some of them are liquidated, which subsequently causes the market to retrace. I think that the context and frame of reference is everything. And you look at where the year started at around 29,000 for an asset like Bitcoin. And now we trade in that 32,000 range, and we seem to have achieved some sort of stability there. We're still up 10% on the year. And if we look back to last year, to 2020, you're at a 300% gain. So I do think that crypto bear winter is a bit of an over-dramatization there. And we're finding a healthy stability at these current ranges.
The other thing to consider is that back in 2018, the lows in 2019 was reached around $3,500 for Bitcoin. Now, at its highs back in 2017, before the retracement, we had just shy of $20,000. So from $19,000 to $3,500 is more than obviously a 50% retracement. Can you make the same sort of parallel to today's prices? Can you say, well, Bitcoin needs to retrace to X percentage before we bottom out? Can you draw the same parallel back to the last cycle we had, Shane?
I don't think so. I think, we're looking at an entirely different marketplace wherein traditional financial institutions are just now starting to dip their toes into the space. I think that the entire ecosystem is much further legitimized versus where it was in 2017, where not many sophisticated institutions were yet involved in the space.
Okay. I've been hearing this talk of Bitcoin still in its early days of adoption. So I'll let you comment on that, and I'll have a few follow-up questions on adoption. Where are we in the adoption curve if we compare Bitcoin to, let's say, emerging technologies in the past, like the internet, the phone, radio, and so forth, so on and so forth?
Absolutely. You often hear that cryptocurrency is where the internet was in 1999. And I wouldn't go that far. I would say that we're starting to see more signals and signposts that more traditional financial institutions are getting involved in the space, either from an infrastructure perspective or from an investment perspective of a portion of their balance sheet. So I think that we're much further along, whereas some people would say we're in the bottom of the first. I think maybe we're at the top of the seventh.
Okay. Now, here's what I don't understand, Shane, is that let's take the telephone, for example. It used to cost a lot of money to make a phone call from Boston to New York. Now it costs absolutely nothing. What I'm trying to say is that as technology matures and becomes adopted by a wider audience, it actually becomes cheaper to use. Do you think that principle could be applied to something like Bitcoin? Suppose more people were to adopt at the tail end of the curve. Do you think we could potentially see the reverse happening for prices? Prices actually go down. It becomes more affordable to use and buy Bitcoin.
It's a great question. And I think that it's centered around, what is the killer use case for Bitcoin? Back in 2009, when Bitcoin was first conceived, it was conceived as an electronic payment system, peer-to-peer, without the need for a central authority. And I think Bitcoin has evolved into a store of value now. I don't think that its killer use case is a cheap P2P system of payment. So as we see further adoption, I think that narrative of Bitcoin as a store of value will become further solidified. And other altcoins, other smaller cap cryptocurrencies, will seek to take on that mechanism of peer-to-peer payment, which could be sufficiently cheaper than what we currently see today.
Okay, so let's talk about the altcoin market now. So we've given a broader overview of the large crypto space at large. Let's talk about specific coins you're looking at. In particular, we'll follow up on what you just said. Forms of payment. Which altcoins do you think could be superior forms of payment than, let's say, Bitcoin or Ethereum?
Yeah, absolutely. I guess, I'd take sort of a meta response there, and I'd say what sort of protocol is actually most efficient for building on top of. As you likely know, coins like Ethereum offer a platform for other decentralized applications to build on top of. What we're seeing now is a lot of popularity in the Solana ecosystem, for example. Big reason behind that, or catalyst, I think, is because the capacity of that protocol to actually handle high throughput, high transaction speeds, which allow the system to scale significantly. Whereas platforms like Ethereum are starting to encounter scaling issues. Those issues have largely been responded to newer market entries, such as protocols as Solana.
Okay. And look, AscendEX is an exchange with many, many listings. I haven't counted all of them. How many listings do you have on your platform? Let's just instead of me making up a number, how many listings do you have? I can't even, I'm scrolling through, I can't count all of them.
AscendEX as a trading platform supports over 200 assets. Those are coins and tokens.
All right. So you've got your finger on the pulse on a lot of different coins. Which ones have been catching your eye? You can give a higher level overview, if you like, of the market. What kinds of projects, what kinds of protocols are emerging now that have a lot of growth potential?
Sure. I think what we've seen a lot of growth in is decentralized finance, often referred to as DeFi, as well as NFTs, non-fungible tokens lately. Those have been very popular with speculative communities.
Why couldn't I just buy Ethereum then? Isn't Ethereum sort of the de facto DeFi protocol?
I guess, that's often an approach taken by speculators in order to get sort of pass-through exposure in order to, take advantage of any sort of asset that's built on top of the Ethereum protocol. That's sort of spreading risk across on more of a protocol layer versus getting the high risk, high return exposure that you might get by investing directly in the token.
Okay. Can you define the term altcoin? This is, in the past, it was probably easier to define. It was anything beside Bitcoin. But how would you define an altcoin? What qualifies as an altcoin?
Yeah, absolutely. I think it's broad vernacular. Sometimes, depending on the audience, you refer to altcoins as anything that is not Bitcoin or Ether. To other cypherpunks, individuals that are more deeply involved in the cryptocurrency ecosystem, you'd often hear altcoin as a non-layer one asset. So layer one referring to the protocol layer, such as Ethereum, or as I referenced, Solana earlier, and then tokens or altcoins being built on top of that platform. But again, it really depends on the audience.
I often talk about the altcoin market with guests, and experts have told me that altcoins generally follow, and you can agree or disagree with this notion, but altcoins generally follow the bigger ones, Bitcoin and Ethereum, with just a little bit more leverage. Now, I don't know if this is true in your from your analysis. So, where do you see the altcoin market headed, and where do you see the larger coin market headed, Bitcoin and Ethereum? Are they necessarily correlated, Shane?
I do think that they're highly correlated. To your point, when we see retracements and capitulation in the Bitcoin and Ethereum marketplace, usually these altcoins will follow to a greater extent. So a lot of altcoins that went live in early 2021 are down anywhere from 90 to 95% from all-time highs. And I think that we should expect that cyclical nature to continue. Right now, we definitely see a quiet period of new issuance and new creation of these altcoin markets. And I think that we'll continue to see that persist until Bitcoin and Ether break out of their current pricing bands.
If something's down 95%, I mean, what Why would I not just go all in on that? I mean, what do I really need to worry about the remaining 4%, Shane? Basically, what I'm trying to get at right now is this the best buying opportunity of your lifetime, or do you think we're still in a bear market?
It depends on your risk appetite here. I hesitate to say that we're in a prolonged bear market, but I do think that the market is quiet. We have seen a lot of retail demand subside versus its highs in February and March of this year. Certainly, you could argue that buying at down 95% is a steal at these levels. However, I am a firm believer that we are still in the midst of a quote unquote science experiment where roughly 90 to 95% of the new assets and issuances in this ecosystem will likely fail. And I think that this is a healthy nature of the ecosystem. We don't quite know which is the next Amazon.com versus a Pets.com if we use the analogy of the internet circa 1999.
Okay, so let's talk about crypto investing strategies now. Do you think someone should be more concentrated within a few names in the crypto space, or I've heard of people who are diversified across dozens of different tokens? What do you think is a more appropriate strategy given today's market environment?
Absolutely. I would say the latter, exposure across a dozen different cryptocurrencies. I think a common misconception that I see from early investors is that an investment in Bitcoin and Ether is pro rata exposure to the broader ecosystem. And that's just not the case. I think that there are a lot of different experiments being conducted, a lot of different intelligent development teams that are trying to address very pertinent issues. There's no telling which protocol is going to be the winner. So I think broad exposure is definitely an appropriate investment strategy moving forward.
Okay. And before we move on to specific earned products, do you have a price target for Bitcoin? Something that makes sense to you?
It's tough to say. If I had that clairvoyance, I'd probably be on a beach somewhere long ago. But I think expectations of seeing Bitcoin close the year in mid 40,000s is probably a healthy expectation for me.
So on your notion of Bitcoin serving as a store of value in the future, do you think it could face competition in that front from things like stable coins and the emergence of central bank digital currencies?
It's a great question. I don't think that the emergence of stable coins will necessarily dethrone Bitcoin as a store of value. However, we do see a lot of other crypto assets that could also function as a store of value and then have compelling utility. As I discussed earlier, Bitcoin started its life cycle as a mechanism of peer-to-peer electronic payment, and it's arguably failed on that use case. However, the functions of Bitcoin, immutability, scarcity, durability, etc., do exist with other cryptocurrencies, which also then have compelling fundamental value, such as Ethereum. Which is why I think that there are pundits that would argue the quote unquote flippening will occur, wherein the market capitalization of Ethereum overtakes that of Bitcoin.
Do you agree with this with these pundits?
My personal portfolio definitely agrees with these pundits that we will see Ethereum overtake Bitcoin in the near future.
Okay, let's talk about some earned products now. Looking at your website on AscendEX, let's talk about staking. And then let's talk about DeFi farming. For those who may not be in the know, can you give a general overview of what these terminologies mean and what people can expect from investing in these products?
Sure. Staking and DeFi yield farming are different flavors of yield generating products. It's a mean to get more out of your crypto assets. Rather than having them sit in a wallet and collect dust, you can actually collect interest on them. We see yields as high as 100% for some of the assets that are supported on the AscendEX platform, for example.
How is that possible? Like, I have a friend who asked me that question. He literally straight up said, how is that possible that yields on crypto exchanges and products like yourself, other companies are doing the same thing? How is it possible that yields are so much higher than, let's say, a traditional financial institution from my bank? I'm getting what? Less than 5% interest on my high interest savings account, and you're offering what, double digits? Tell me about the mechanics of how this works, Shane. How is that? How is it that you're offering such high interest rates?
Absolutely. Well, it depends on the asset. For example, if you take staking as a mechanism for yield generation, What a platform like AscendEX does is that it allows the individual token holder to participate in consensus protocol. That's a fancy way of saying that your assets can contribute to the audit process, which occurs on the underlying blockchain. So, for example, an asset like Bitcoin has a proof of work consensus protocol, wherein miners contribute computational resources in order to help audit new blocks being mined into the Bitcoin blockchain. You can do the same for proof of stake assets by staking your assets and therefore contributing resources to the process of auditing that underlying blockchain. In exchange for that allocation of resources, you are rewarded with payment in kind. So you are paid back tokens, and that is your source of yield. There are other forms of yield generation, such as lending and borrowing protocols. So that yield is simply a function of the demand of borrowers on the other side to borrow that asset. And they may do so in order to short and hedge exposure, for example.
Okay. Let's talk about centralized exchanges. The same friend who had skepticism around yield products had skepticism around wallets and exchanges as well. He said to me, David, how do I know I'm going to get my money back if I deposit X amount of money with these exchanges? What's your response?
Absolutely. I think that there are valid concerns from that sort of community that's hesitant to actually custody assets with these platforms such as Binance, Coinbase, AscendEX. The fear is not your keys, not your crypto, meaning that if you don't own the underlying cryptographic keys, how can you claim ownership of that asset? What I would say is that there are trade-offs, is that if you choose to self-custody in a hardware wallet, for example, you sacrifice access to generate yield off of your assets, for example. You also sacrifice ease of access to liquidity if you want to seamlessly sell that asset. So I guess to proponents that would say you need to self-custody, you can't trust a centralized exchange, I wouldn't necessarily try to argue with them. I would just simply point to the trade-offs that exist in that regard.
Okay. And I have, different friend now, enough of that guy. Different friend asked me questions about ICOs. He wanted to fundraise for his project. Tell me about the advantages of ICOs and now IEos as well. Is this something that companies should be looking into besides your regular IPOs, besides regular financing through equity and debt?
Yeah, absolutely. So, of course, ICOs and IEOs are a playoff of IPOs, initial public offerings. ICOs referencing initial coin offerings and IEOs referencing initial exchange offerings. To your friend, I would say absolutely. This is a new decentralized means, revolutionary way of fundraising. Whereas in traditional equities markets, primary fundraising is gated to small number of niche VCs and private equity firms. You now have access to institutional and retail investors if you choose to conduct an initial exchange offering, for example. I think why these have become very exciting in the cryptocurrency ecosystem is similar to IPOs. They are immediately followed by a liquidity event that facilitates price discovery. So you have basically this early stage opportunity to participate in the equivalent of a primary investment with guarantee of a liquidity event immediately on the horizon, which can make these very volatile yet very exciting investment opportunities.
Just thinking from an investor standpoint, if my friend were to issue a new token for his company, why would I invest in that coin? Is it tied to the performance of the company? What would guarantee a return on my investment in this particular scenario?
Well, certainly there's no guarantee on investment. I think as with all cryptocurrency investments, it is high risk, high return. I think that your appetite to invest should be a function of future success or perspective of future success of the company of which that underlying token represents or provides utility for.
Well, I guess marketing as well. If you're Elon Musk, I don't think you need to worry. All right. Finally, let's talk about your involvement with BitClout, an emerging platform. Tell us about what you're doing there.
Yeah, absolutely. So AscendEX just facilitated the listing of Clout, which is the native token of the BitClout platform. BitClout platform is a decentralized social media platform that incentivizes creators by creating their own creator coin. So you can actually track the popularity of various users of this social media platform based on the price of their asset. So you have celebrities such as Elon Musk, Justin Bieber, even the Winklevoss twins, my former employers, that have some of the highest priced creator coins. So it's again, like all things in cryptocurrency, we see it as sort of this exciting new science experiment that seeks to potentially offer an alternative to the traditional solutions such as Twitter, Facebook, and our centralized social media platforms.
Okay, so my last question before I let you go, Shane, you've had a chance to work with some influential people in the space, to say the least. Now, Elon came out with a quotable quote yesterday in his podcast with Kathy Wood and Jack Dorsey. He said that I may pump, but I don't dump. So here's my question. How likely is it that these whales are likely to hodl forever? And would you potentially see, what is their mentality? Do you think they could one day just unload onto the market? Because that would have a huge, impact. But how likely are they also to follow Elon's mantra of not dumping?
Well, I think many would argue that Elon actually has dumped with Bitcoin holdings. And I believe that was public filing of Tesla, that they did sell a portion of the Bitcoin from their balance sheet. It's tough to say for sure. Going back to your question, do I believe that these large hodlers will dump once upon a time? Yes, I do believe that they will, because everyone is a profit-motivated individual. I think it's simply a function of how much liquidity is there in the marketplace in order to absorb that sell pressure. If you have whales that are actually holding a significant portion of the total outstanding supply, then we are at risk of seeing capitulation caused by this dumping. By and large, though, I think seeing these celebrity figures involved in the cryptocurrency is a net positive for the ecosystem.
Do you think we could ever get to a point where Bitcoin could suffer a liquidity crisis, so to speak? I hesitate to use the word crisis, but a liquidity problem. Suppose all the coins remaining were mined, and suppose the float, so to speak, of Bitcoin were minimal. Do you think that could be a concern?
It could be a concern. However, as a hodler, that works in your favor. If there's constrained supply on the market, limited liquidity on offer, it means that any aggressive buyers that are coming into the space are having significant market impact, resulting in price appreciation. And I think that that's core to the thesis of many early stage Bitcoin investors, given its scarcity.
Well, Shane, excellent thoughts. I appreciate your insights, and we'll look forward to speaking again, hopefully on another quotable quote Elon Musk has made the day before. But appreciate your insights, appreciate your knowledge. Thank you for coming on the show today.
Absolutely. Thanks so much for having me, David.
And thank you for watching Kitco News. I'm David Lin. Don't forget to subscribe and follow me on Twitter at DavidLin_TV.